Hey, what up, y'all? It's Cory, the real estate guy, man. And I know we are going through one of the toughest times that we've gone through in a while, at least in our generation. So things are getting even harder in terms of things in the real estate market. So I want to brush on those things for right now, but I also want to encourage you guys to take this time not to just sit around and watch movies and Netflix and Hulu and all of that stuff, man. Try to do something that's going to empower you and uplift you. So when this whole time is over, you come out and you've gained something. Maybe invest in yourself in reading, maybe investing in some type of company, doing something that's side hustle that you had an idea of getting that active and learning, because you're at home, you ain't got nothing else to do. Everything is going to be the same for quite a while. So why not impact yourself? So just wanted to share that with you. So more importantly, for right now, what's going on in the market? All right. What's going on in the market is lenders are changing their guidelines daily. You have to know that even though specific programs or loan types are guaranteed, right? So for instance, let's take the FHA. It's the most common one. FHA guidelines are 580 and above. You can get approved for a loan at 3.5% interest rate, right? 500 or below, then you have to get, or 579 and below on the FHA loan. 9 times 10, you got to bring 10% down of the entire sales price to the closing costs, and you can get a loan. These are just approval qualifications, right? That is what the program Fannie and Freddie will back you on, right? They allow you to get approved for a loan at those standards. Meanwhile, these lenders or these banks or these investors, they understand the guidelines. They underwrite in according to those guidelines so they can sell them off to that market. That's what banks are doing. They sell them off to that market, but they don't necessarily have to follow that FICO score guideline. So for instance, they can say, yeah, I know Fannie and Freddie will take it at 580, but we require you at this bank, if you're going to get a loan from this bank, to have a 620, or we require you to have a 640. Right now, what's going on with making things so difficult is those guidelines have shot through the roof. So you have to have almost exceptional credit and a certain amount of money in the bank, reserves is what they call them, before they even look at your profile. So when you were able to go in with maybe a 605 and get a FHA loan, have no issues, now you may need, at a particular bank, you may need a 680. You may need a 660. I'm sure there are a few banks out there, few and far between, that are still doing it at maybe 620, that low end. But 9 times out of 10, if you're going to get approved for a loan right now, you have to have almost ideal credit, and you have to have cash on hand, which sometimes, or not sometimes, it really impacts the market of those that are first-time home buyers or looking for an FHA loan, because, you know, that's the reason why they're using that loan. And that's understandable. I understand that. But right now, lenders are looking to CYA, for lack of better words, to make sure that they're able to have sound investments. All right. So let's talk about it. Lenders are changing their guidelines. What qualified you last month or last week is not the same for this week. So people are actually going through the process. I know, because it happened to me last week. But they are getting approved, or they were approved under the guidelines. They had a certain credit score, and they had a certain percentage of debt to income ratio that was allowable at that time. New guidelines came from the head of the banking company that they were trying to get approved for, and no longer could they do the deal. We were in option period at that point. We were in option period on the last day, and we had to back out so my client could get their earnest money back, because we knew that we were having some situations with financial funding. So it's happening everywhere. It's happening almost all the way to the closing table. What you need to know is, when you close, the day that you close, even though that they said, hey, we had to clear the close 3 days before. All right. For those of you that are in the process of thinking about going it, even up until that point, a lender can say, we will not fund the loan. It's happening. Okay. We are not going to fund the loan because this, that, and the third, our guidelines have changed and we can't do the loan right now. So I just want to save you some heartache and let you know what's happening so you can know and be prepared. All right. Loan modifications, deferrals, and forbearance. You're hearing all these different kind of modifications that you can get with your lender. That's reaching out to them and actually having a very detailed conversation, reading through the red tape, reading through the fine print. Okay. Some of these things are like a balloon payment. And what that means is, yeah, they may give you 3 months or 6 months where you don't have to pay anything, right? But once that ends, that term ends that you guys negotiate about, what they're doing is they're saying all those months that you had off, we want you to pay all that right now, plus whatever the mortgage is for that month. So just easy numbers. Say, for instance, your mortgage was $1,000, right? You took 3 months off, right? 3 months off. 3 months of $1,000 is $3,000. They become due that at the end of that period plus the $1,000 for that current month. So now you owe $4,000 at one time. Doesn't make sense, right? Don't make sense. If I didn't have the money to pay then, what makes you think I have this large amount of money to pay now? So make sure you understand what's going on. Deferrals. The only thing that I've seen that is beneficial is that you can tack on a certain amount of payments to the back end of your loan term. Which that means is, say you take 6 months and I can't pay my mortgage, and you negotiate with the lender, hey, I can't pay right now, but let's tack it on to the end of my loan. Okay, that seems to be the only thing that I think is the best in this scenario, especially if you've really fallen on hard times and you cannot pay your mortgage, because all that does is tack it on. It extends how long you're going to be in that home. If you plan on being there for the duration of you having that the loan amount, then there's no problem. The only thing that it comes in effect is if you refinance or you sell earlier than that point, all those payments that they didn't collect interest on during that time that you weren't paying is going to also be due at that point. So keep that in mind. Ask the right questions. If you need some help, call me. There's going to be, or there's a slope in the listings and active listings. Just to let you know what's going on in the market. People that have their houses, or you sellers. In March, we saw a slope from the year last year in March of 4.8% houses that were new listings to the market, and active listings have been down 3.2%. That means people aren't trying to sell their house. They understand that this last part, possible drop in home values. Okay, if people aren't able to sell their houses, or if they really want to sell and they need to sell, then 9 times out of 10 in this market today, you're going to be selling your house for less than what the actual value was. The market value of it will change over time. All right. So what may have been a $300,000 house today may be a $280,000 house tomorrow. Good for buyers, but the market is just so volatile right now. Everything is going on. It's crazy. Investors aren't buying mortgage-backed securities, but the Fed did dump all that money in. So we're just trying to see. They're trying to weed all that stuff out. It's a lot of jargon. It's a lot of things that a lot of people don't understand, but I'm here to help you with any questions that you may have. Understand what's going on in the market. Make sure you're empowering yourself and you invest in yourself. Take the time to grow. It's Cory, the real estate guy, talking about what's going on in the market.